Hello, everyone. Dave Lucas here. Let's see how we doing today. Doc is out for one more week, so it's me going solo. Let's just make sure everybody can see and hear me okay. If you can see and hear me okay, go ahead and drop it in the chat. Looks like we're good here. Checking on my other monitor over there. All solid. Excellent. Awesome. How we doing, folks? Good to see you. Welcome to 12-Minute Trading, our weekly live stream. I'm Dave Lucas, founder of 12-Minute Trading, and we are going to jump into the charts here in just a second. So I just want to make sure everybody can see and hear me okay, as long as you can. That is good. Excellent. Excellent. Okay, cool. All right, so let's just jump in, guys. There's a lot going on. So we've got charts that are coiling up, getting ready to trend again. Don't know which direction yet, but you have to say it favors higher. I expected to see some sort of pullback into the end of the month or beginning of September from a seasonality standpoint. It doesn't have to, but the ultimate move would be to push higher, bring everybody along, and then do a quick trip, 5% correction, 3 to 5% maybe, and kind of shake those people out and then go running back higher as we get through into September, October, that time frame. So that's still possible, still on the table. We'll just have to see if if it does play out. But if not, hey, we had plenty of opportunity here. So I'm going to jump right in the charts. Let me pull up the screen. Let's see here. I want to show. Let's show this one here. Maybe. There we go. All right. So I'm starting with the chart on gold, GLD. Okay. And the reason I'm starting with this is because this is the weekly chart. So this is a 3-year weekly chart on gold. And this is one of the biggest flags I've seen in this thing. This thing is coiling. Gold is about to have a major move in the coming weeks. And, I don't know which way it's going to go. The only thing I can say is we continue to deficit spend, rack up debt in the U.S. That continues to add to the debt. And the last few times we've been in a place like this thing is broken to the upside. So you go back and you look, here's, several weeks here, probably 8 to 10 weeks of coiling up. And then boom, look at that run. We're well beyond that now. We're double that time frame here. Back here, coiling up. 8 to 10 or so weeks, boom, and then you're on that run. And so for me, it's like, all right, this pattern keeps playing out, this like stair step, this explosion higher, goes sideways for, a long period of time, explosion higher, goes sideways for a long period, explosion higher. This is coiling up. It's just massive. You can see how charged up that energy is, 66. It's, every time we've been up here before is when we've gotten those massive explosions out of this thing. So put GLD on your radar. The last time we saw this, you can see it started at 242, went all the way up to 317, right? So that's a massive move. That's well over 1,000 points in the spot price of gold. So this is a huge opportunity coming your way if you're patient and you're watching and you want to really take advantage of a trend. This is one to watch for that trend to start, whichever way it goes. So I'll be watching this. Usually I can call a trend on the weekly chart once I see we get down into the 50s here, low 50s, and we start to trend in a direction and this goes with it. That's usually when I see that. So, and I can say, yeah, we're there. So I'll keep on that, week to week in here. So with Doc and I, so that we can, help kind of spot that, signal it. You don't have to be right on any trend. That's always the fallacy. Nobody can ever call the trend. You don't have to be right. You just have to be early enough to catch it and then ride that wave. And so gold is one to do that on. Now, let's just jump over and look at the SPX chart because we've got something interesting going on the weekly chart. You see how we've come up here and we've kind of hit right close to that all-time high that we hit just recently, but we're rolling over. See how it's kind of like rolling over, and that tends to be, a stopping point. Whether we go sideways for a while here or we have that pullback, right? This tends to be a time where we go sideways, 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 and it's like, okay, do we get that last parabolic tail and then the washout down, or do we just get that pullback down? And a great pullback would be about to 6,000. 6,000 right here. This former resistance becomes support. Great place to pull back to. And it would be really healthy to continue this trend higher into the rest of the year and beyond. So that's if you see that, it's a great place to sell into, even pick up shares, that sort of thing right there at that point in time. So going into the daily chart on this, though, you can see we've come right back to that Bollinger Band, but we got what I call a squeeze on the chart. So a Bollinger Band squeeze looks like this, right? As things squeeze together, think of it just like pressure, right? The more that you get pressure, the more you're gonna like move out of there in a quick way. I always like if you think about like water in your hand and you go like that, right? And squeeze it, the water comes flying out of your hand. Well, it's the same thing when you start to get squeezes on these Bollinger Bands. So, and it can go either way, up or down. It's just, again, being prepared for it. This thing's at 50. That's pretty decently charged to go on a trend for 6 to 8, maybe even 10 days. So we are, we're at the precipice of another trend. Now, it could be back down this way and it could be there, or it could be that kind of parabolic move to get everybody on board, right? So there's kind of two ways to go. The point I want to make is that we're on the precipice of that. Now, we've got CPI this week. We've got, the other inflation data this week. Maybe that's a catalyst. I know Powell speaks towards the end of the month. That could be a bigger catalyst, right? To signal what's going to happen in September, potentially for rates and that sort of thing. So we'll just have to let it see. But this is why, I've been cautioning my students, just stay patient right now. We're taking advantage of some things, but just stay really patient because there's some decent movement coming and we want to take advantage of it. You don't want to quite step in front of it yet. But you do want to look for things that have really been beaten down that are turning the corner. So an example of that, we entered last week on coin, right? So coin came all the way down, lower Bollinger Band, exhausted energy, right? And that's a recipe right there to rebound or at least find support. And so what we do, we sold all the way down here. We sold way, way down in the 200s on coin, and trade's paying off really, really well for us right now. All right. So that's an example of the stuff that still exists out there that you can find. Another one I haven't done yet, I'm watching is FTNT, Fortinet. It had a horrible drop after earnings last week. And I'm looking to see if we can get a little bit back inside the bands, right? Because the weekly chart on this thing, is got exhaustion too. And so this is like prime time selling on this thing. So typically in this case, 3 to 6 months out, 10 delta around that range is what I'm looking at. But I want to get, an 8 to 10% return on risk for that, for a high probability trade. I could come in and sell right at the money right here. But again, if we have a potential of a decent little pullback coming in the next few weeks, I'd probably stick more high probability on this one just because it'll probably drop further with the rest of the market. And again, the key area here is around 60. Being below 60 on this is really good. Plus, you're below the 50 or the 200-week moving average too. Great level. So this is just an example of a perfect looking setup that I like to take and sell into, usually with the put, naked put, or cash secured put, or a put spread. Right? You can do a put spread, which is a little bit less expensive. I'll show you an example on that real quick. Let me go ahead and pull up the chart or the options chains on FTNT, and I'll give you an example of how this may work. And, for my students, this is something that I'll be evaluating. I don't know if this would be exactly what I'll do, but it'll be somewhere in this neighborhood because I've been watching this. Let me switch up to, let's see, to that window. All right. So here's FTNT. You can see that here. And so right here, I typically am going to look to go out to December, see if I can get a decent amount there. So right now you can see if I sell the 65 by 60, right? It's paying me $1.05. That's a little that's really good, but it's a little close as of right now. If I can get, remember, 60 is that level I want to get to. Does 60 pay me at least? Here it is. There's your 10% return on risk, right? You can get about $60 per spread. So that's a $5 wide spread. You're getting about 63 cents. So 10% on that would be $50 per spread that you're doing. So you did 10 of these, you're making $600. You're risking about a little less than 5,000 on that for that sort of thing. So that's kind of a setup, on this level of what you'd be looking like. And you can see the expected move for this is right about there. So expected move is 15. And right now we're at 75. So right there puts you right at the expected move too. So pretty decent setup, nice payoff. And then what you want to see is, like we saw in coin, that rebound in FTNT, run away from it over the next, few weeks or so. And then you can buy it back for like 10 cents, get out of it and, lock in your gains. I'm not typically in these, things for more than 6 to 8 weeks at the most on these things, right? If you hit them right. So that's an example of getting into one of these stocks that's been beaten down and taking advantage of it. All right, let's go back to the charts real quick. Yeah. All right, so sticking with everything in the charts, we're going to go back and let's take a look at the NASDAQ because that's been leading the way. So you can see it started to charge back up. This sideways action charged it back up, but now it's starting to give up a little bit. So, we keep seeing these reversal days. It started about a week ago, and we see these days where we pop higher and then we reverse back down and we go negative, right? And then maybe have a little bit of a green day, but then reverse the next day, right? So we're seeing that type of tiredness come into the markets at these levels. And so as you can think about it, that's really makes sense because you've gone so far so fast. In this case, you've gone from 1,700, 17,700 or 700 to 23, almost 24,000. I mean, massive move. That's 6,000 points in the span of just 4 months, 5 months. And so does it make sense to take a little bit of a pause, maybe some profit taking off this? Absolutely it does. And so that's kind of what we're looking at. And it just, again, lines up with that seasonality. But right now we're upper Bollinger Band here, kind of pulling back inside of it. So again, we're turning down. Does this thing go back down here? Or are we going to get that parabolic move higher to get everybody on board before everything's exhausted, then come crashing back down to earth? We'll just have to see. So that's that. Now, the other thing too, as we talked about the last few weeks, is the Russell, right? Again, the Russell is not going with the rest of the market. The Russell, just like the rest of the market, did have that down day, but it hasn't rebounded, right? The others have rebounded close back to those highs. This has not. And this looks to be rolling over. Remember, the Russell is like kind of a canary in the coal mine. It is a lot of times going to move ahead of the rest of the market because these small cap stocks, they're harder to rotate in and out of for the big boys, right? If I'm going to move 1 million shares on one of these stocks, I can't do it like I can like an S&P 500 stock where it's lost in the shuffle of the volume for the day. If I move 1 million shares on one of these stocks, everybody notices. So I have to do it systematically over time. So I have to start and do it over a period of time versus doing it on like a big, bellwether or something like that. So that's why you kind of watch this and say, okay, if this is rolling over and it starts to head lower down here, maybe the next few weeks you're going to see that in the overall market. Now, the weekly chart here, you can see definitely is putting in, this is a big triangle, right? This is a symmetrical triangle as of now, and it can break either way. So watching this if it breaks down. So it's kind of like it's one of those things where you got these different signals. You watch the Russell, you got gold, right? So does the Russell start to break down? Does gold start to break out? Does the rest of the market kind of sit there and not be able to get to new highs and then start to roll over? It kind of tells you kind of how everything's starting to go. And it could be it'll be probably quick if we get some downside, over the span of a week or so, but it'll be pretty nasty, right? It'll get people scared. And that's what you want. You want that volatility to spike up. That's going to pump options price light to sell really far out of the money, take advantage. And so that's what I've been telling my students. We're dipping our toe in the water on things, dipping our toe when we get those ones like coin and some things like that. But really, really focused on, setting aside some cash to really take advantage of really, a decent dip if we get it. If we don't get it, we put it to work. It's not a big deal. But just being ready for that, right? A lot of times, I think it was like old Jesse Livermore quote or anything. Like the most important skill is patience in the markets, right? It's the ability to sit for long periods and not do anything, and then take the the trade when it really does finally show up and go in on it, right? That's a lot of what great traders learn to do. So, last thing for now, I'm going to jump in on is IBIT because Bitcoin looks to be breaking out. Okay, Bitcoin hit 120,000 today. IBIT, clearly this daily trend is starting to go up, right? So right now, IBIT looks like it is probably heading back to its highs at least, maybe going to break through here. This is a perfect example of a Bollinger Band squeeze. Remember, squeeze and come out of your hands like that. And so we are seeing that. So can we get over this hump? If this thing continues like tomorrow and keeps breaking through here, you're probably getting into the 70s on this thing. And you've got a decent amount energy, enough on the weekly chart to continue that trend higher, right? It's been exhausted back here down in this level at 30, 25. So it's got some ways to go if it wants to burn that out. So that's something that I think is another important thing to watch. Markets are changing. The way that markets are behaving, the way that what the what's drivers are of the market, what the winners are, all of that stuff is changing from kind of the oldish guard to the new guard. And things that are taking over are things like Bitcoin and Ethereum and gold and stuff like that. And then obviously some of these really important sectors. I think energy is a sleeper. I think energy is one to watch, especially like nuclear energy, natural gas, obviously traditional energy too. That's going to be needed because all the data centers and all that stuff that are, coming our way, like something like AI, at today's capacity, if AI was built out to its full extent, it would use 97% of the electricity that exists out there right now. So more energy has to be brought online, and like data centers. So if I go like, I think like things like Datadog, you can see Datadog had a really nice run from earnings here, and just came back down a little bit. But this is one that is a big one for that. There's a number of these things out there, but data centers. You've got obviously the energy side, but then you have other players. You have other players like Rigetti, and quantum computing. So here's like a Rigetti, right? And so this is starting to move higher again. It's been a long time in this $12 to $10 range, and now it's starting to break out. After being at 30 cents, think about that trade, in the last few years, guys. Quantum computing is starting to take off. So that's another sector that is gaining. Obviously, we've got the chip sector. We know about NVIDIA. We know about all that. But the big thing right now is, there's these different, again, changing of the guard sectors. Now, if we get a decent pullback, you're going to see everybody pile into the bellwethers, the safe ones like the AT&Ts and all that stuff again. But it'll be short-lived, and we'll get right back into this stuff again. So, follow those sectors, put those on your radar, make sure that you've got a good pulse on those, and then take advantage, right? Find things that are getting beaten down, take advantage of it, let it pay you to take the risk with it. So, all right. So let's see. Is there any questions out there? Let me look. I don't see any questions as of now. Let's see here. right. Okay. If there aren't any questions, I'll leave you guys for today. But hopefully that gave you some things to think about. And again, rewatch this. Look at some of those breakouts that are coming our way. Put those on your radar. It's going to happen sooner than later, probably within the next 2 to 4 weeks on some of these things. And there will be, some of the best opportunities of the year outside of earlier this year, getting that dip, getting the pullback after the tariff. So this will be the next big opportunity. So make sure to take advantage of it. And thank you guys for tuning in. Doc should be back, I believe, next week. If not, it'll be me solo again, but I believe he's back. And he and I will be after this again together. And it'll be great to have his perspective on all this too. So thank you for tuning in, spending time with me, and have a great rest of your day.